Hello guys, so this is a trade breakdown of this US30 trade using top-down analysis. So currently we're in the daily time frame and this is where I mark out the market structure. Okay, so currently we can see that the market is bearish, evidenced by a series of these lower lows and lower highs. You can see lower low, lower high, lower low, lower high. Now watch what price did here. Price, well, this lower high was supposed to break structure, right? But price got here, pushed up and eventually broke structure. You can see that, right? So it means that for this trend to continue, price has to push up to this very zone that broke structure and push down. Okay, so what I'm going to do now is, still on the daily time frame, I'm going to mark out that supply zone. Mark out that supply zone, okay? And then let's play price and see. So on playing price, you see that price came and tapped into that zone, meaning that it has given us a new lower low. So that new lower low now is going to be our draw on liquidity. Right? So what we're expecting price to do now is, we want price now to, after tapping into this supply zone, to come and tap into this drawn liquidity and continue the trend. That's what we're going to be looking out for. So we already know that we want price to come down. So what we're going to do now is we're going to drop down to a lower time frame. We're going to jump down to the 1 hour time frame and see what price is saying over there. Okay, good. So now we're in the 1 hour time frame, and in this 1 hour time frame, I want to be looking out for two things. First of all, I want to see a sweep of liquidity. That's one. And number two, I want to see a change in state of delivery. Now that liquidity sweep is going to tell me that price is ready to start selling to the downside. Okay, so I want to see that liquidity sweep and then a change in state of delivery. There must be a liquidity sweep. So let me play price now. This is where a lot of traders get confused, or this is where a lot of traders make mistake. Now you can see that price has tapped into this supply zone and it has started printing lower lows and lower highs. You can see it's going down, it's coming up. You know, a lot of traders will be looking for entry around here. This is liquidity. Why is this liquidity? Because price has not yet swept liquidity inside of this zone. We must see a sweep of liquidity before we start seeing a change in state of delivery. Okay, so this is a trap. A lot of traders will enter here and get trapped. So I'm going to play price now. Let's see if we're going to get that liquidity sweep we're looking for. See, price decided to push up back, you know, and hold on, I'm going to pause price here. Zooming in on this place, you can clearly see that price has swept this high. Let me mark that out. Price has swept this high, meaning that price has collected all of this liquidity above this particular zone. So now that we've seen that liquidity sweep, we are going to now look for a change in state of delivery. Let me delete this. So good. Now we are going to look for a change in state of delivery that's now going to push price from this area down to this draw of liquidity. Okay, so I'm going to play price and see what price does. Now let me pause it here. Let me pause this price here. Now when you look at your charts and you're seeing this type of candles and you're confused, obviously I can understand this. Okay, I can see the series of lower lows and lower highs that market is creating here. But just in case you get confused, the best thing you should do is drop down to a much lower time frame, in this case the 15-minute time frame, so you can clearly see the market structure that market is creating. So now this is the 15-minute time frame. Look at what market is creating. You can see that from this high that swept that liquidity, you can see the market pushed down here, came up, pushed down, came back up here. Now watch what happened here. This particular high now has swept this high and pushed down. Now, by virtue of this high sweeping this high, it means that this high is now protected. Okay, it means that for this bearish trend to continue, price must not go above this high. For this bearish trend to continue, price must not go above this high, because this high has swept this other high. Okay, so this high is now protected. So what I'm going to do now is I'm going to mark out the opening price of that candle, and that's going to be my entry. I'm going to use that as an entry. Okay, that particular candle that swept the liquidity of the previous candle that, you know, broke structure to the downside, I'm going to use that as my entry. So I'm going to put my limit order here, put my stop loss above this high, because this high is protected. Price must not go above this high for this trend to continue. And I'm going to target internal range liquidity as always. So I'm going to do this. I'm going to push this down. Good. So I'm going to be targeting internal range liquidity, which is this particular candle. Now, obviously, this is our drawn liquidity. This candle, this line here is our drawn liquidity, but I'm going to target this other wick here, which is this one, because that's just my personal rule. I like to take profit at internal range liquidity, just because sometimes price can come after taking all the internal range liquidity to start reversing. So I just like to take at the last internal range liquidity, okay? But these are drawn liquidity and we're going to expect price to break it. So now we already have our entry. Now I'm going to play price and see what price does. Boom. On playing price, you can see that price has come, tapped into that our entry and is beginning to push down. So from here on, we're going to expect a clean push down to the downside. Nothing should stop price now from pushing down and giving us TP. And boom, take profit. See, easy. Top-down analysis works every single time on every pair.